Hey everybody, what's going on? Jamie Saettele here. It is June 27th, 2018. And this is the Midweek Strategy webinar, also known as Jamie being somewhat confounded by what the heck is going on with the US dollar. So it's been one of those years, frankly, and admittedly, I probably have been a bit too dogmatic in the dollar turning down cycle thing that I've kind of focused on here for the last couple of years. But let's dive into the charts, see if we can't make some sense of some things, and maybe look at some things that aren't so dollar focused, like some other crosses, right? Non-dollar crosses that might be interesting or show promise and opportunity. Okay, so frankly, the long-term chart of the dollar hasn't changed, I guess, since late May, early June. I say it's been one of those years. It's really been one of those months, right? Holy shit. Is crude at a new high yet? It might be. Did we just go through to a new high? What's that high? 72.88, 72.80. Well, 8 cents away from a new high. Wow. I mean, what else can you say? All right, so back to what we were looking at. Still at resistance in the dollar. Do we have another push? Maybe. We talked about a little bit 95.90. I mean, it took out the high 95.15 and reversed last week. So this reversal bar in early June, I thought might have been it, right? Did we follow through? Wrong. Then we had ECB do this thing, right? Or I should say the dollar did this thing on ECB. The reversal last week seemed like another great opportunity to think that maybe the dollar had turned. Lo and behold, we are back up at a closing high. If we were to close the week, we'd be at a new closing high for the move. So all in all, we still have the dollar at resistance. I sound like a broken record. The dollar's at resistance. It's been like that again since, it feels like since forever, but it's really been since late May, early June. So from here, do we go to another high, 95.90 or whatever? Remember, 95.87 is where you'd have two equal legs on the upside. We can see that on the daily chart right here, right? 95.87. At the same time, we have the channel stuff going on, which also would seem to be somewhat ideal, right, in getting the dollar to turn over. As it's happened, we've also been supported, right? So dollar was supported here, December high. It's also 38.2, by the way, of the entire move down from the January 2017 high to the February 2018 low. So I have a feeling that when we look back in a couple months on this, whatever it may be, whether we go to a new high or not, that the dollar will be lower. Okay, that's just where my head's at, right? I know it's been there for a little bit. I probably sound like the boy that cried wolf, but you get the idea. That's what I'm thinking. Okay, let's see here. Where are we at? As I literally, since I start this webinar, the Nasdaq's falling, and I started the webinar 5 minutes ago. There's all kinds of crazy stuff going on out there. Dollar yen hit a level, it looked like 110.50 and came off. Okay. So anyway, there is me starting each webinar saying that the dollar's at resistance, which in reality, I guess it kind of has been, again, since about 5:29. So not a lot of progress, but a lot of angst, right? And a lot of craziness going on. Mahai says, please keep the webinar going if NASDAQ is falling when you talk. Mahai, I'm with you, buddy. I'm short NASDAQ too, right? I remember we talked about the S&P puts a while ago. I got out of those on the dump a couple days ago, but I kept NASDAQ puts. So, you know, whatever. We shall see if that wants to work out for us. All right, so let's go back to where we were. All right. Not going to go over the dollar too much, right? We know this. We know where we are. We know that it's at this level. It's been at this level forever, and you know, blah 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 blah. So, Ty has a question. Where do we cement the bottom in place? What is it exactly that you are referring to, Ty? DXY, my screen, where the bottom in place. I'm not sure what you mean by the bottom. Where do we cement the bottom? I'm looking for, looking for DXY to roll over at some point. Let's move to Euro though, and we'll go from there. So this is the opposite, as we know. And you know, I'm not a completely crazy person in terms of saying that I think there's opportunity on the long side in the Euro, right? The big reason for me, or one of them, is that, and I just did one of those webinars with Gail Pinkert, and this is what I just talked about with them. But the thinking here is that you've simply hit support, which was old resistance, right? That was resistance, that was resistance, and we hit that support actually last Thursday, so not quite a week ago. We've just come back to the level 1593, the level that I'm looking for to provide support, or that I think maybe support, or I should say that I provide support in order for us to try to trade the long side. Notice that I don't have orders in here just yet because, again, the market is not. Can you guys hear me? I just heard audio gone from Ty. Audio still there for you guys? Yes, okay, all right. So 1590 is the level that we want to see as support, because look, remember, if we don't do that, remember we were talking about all the way back in late May, actually, that if we could get one more complete, call it a dumping or whatever, into the 1450s, 1460s area, and that would really be the final, call it the final spot for a, you know, for a low, right? And that's just base. So we're taking the trend line, extending it off of the low. Remember, the dollar's already hit this level, right? The DXY's already hit that level on the upside. The euro has not. So if we do go to a new low, then that's where I'd be looking. And it's, again, now it's actually a little lower, because right before it was 1460. Now it's like 1440. So 20 pips difference. Obviously, in the grand scheme of things, when you're looking for a really big low, it's probably not that much of a difference. But the 1460s, really big level, right? If we just look at closing prices, you can see, just scroll across, that was really the big resistance when we came off the bottom in March of 2015, right? So that's going to be, again, roughly call it 1440s would be the level to note if we go to a new low. I'm obviously hoping that we don't. Actually, I guess I don't really care. Hi, the sound is working for all else. So it looks like we have someone that has a little sound issue here. Anyway, I guess I don't really care. It would make life a little easier if we could get a turn here and then be able to, get into a long position. But if we were to go to a new low, that's where I'd be thinking, right? Now, if we zoom in short term, remember, here's our short-term picture. This is a chart from yesterday. We're right there now. We had a high volume level. You can see that right here. That's the high volume level from last week, or last Thursday, I should say, when we came off of the lows. And it's also, of course, the 618 of the rally, although this rally is kind of indecipherable. Wouldn't really call it 5 waves up. Really wouldn't call it necessarily a 3 waves up either. So to me, it's somewhat indecipherable. And also in the very short term, you've got 2 legs down right here at 1588. So would seem a pretty good spot, or as good a spot as any, I should say, for something to happen, right? And we're there now. So if we just keep going, then I guess this is completely off base. But I'm watching for a turn. I will say that, in the near term, I guess you could pay attention to, let's pay attention to like a daily close, right? So if we have a daily close that is above this level, maybe that adds a little bit more, or, rather than trying to be so precise, right? Maybe a daily close is what we need to concentrate on rather than say a, rather than say just like the tick, okay? But you've got a square root level as well down at 1564. It's a level to watch if we going lower here into the European close the next 20 minutes or so. So bottom line here is, yes, I am looking for a turn higher. I'm sure you're maybe tired of hearing that, but if we can gain some traction at 1590, then there's an opportunity. If the euro just continues to fall completely apart, then again, probably nothing until 1440, if that. So look, it feels like really scary here on the euro, or trying to look for a dollar top, a euro low. It's kind of supposed to, right? It's not supposed to be comfortable. If you're at a turn, you're supposed to feel lonely and kind of almost stupid in a way. So I guess I've got that going for me. As far as looking for a low here, there's also, I said that 1564 level. Don't forget the low from November is 1550, right? So we are kind of in the ballpark, as we say. Now, I actually want to switch, rather than going through majors, I actually want to switch and look at some crosses, some euro crosses. So, if we look at, say, euro pound, right? It's just a nice simple chart here, good uptrend. Euro pound has been in just a dreadful, dreadful range. I haven't looked at it in a really long time because of this, kind of dreadful looking range. Really since November, it's been just a complete disaster, right? Just back and forth, back and forth, back and forth. You've got really what I would call kind of a wedge, right? And we're just breaking through it. We're at the 200-day average now. So if you look at it this way, euro pound's got something of a bullish tint to it, right? You look at it in this manner, and that tells me a couple things. It tells me that euro's probably, if the dollar is going to find some sort of return, right? It tells me that euro is probably a better option on the long side than pound. Maybe it also means that just euro pound's good on the long side, right? Maybe it means that we should be looking to trade euro pound on the long side rather than euro dollar, right? Because when you're looking at a cross like this, you don't know which side of the cross is going to do the work, right? We don't know if it's going to be euro up and pound down, right? Or euro up a lot and pound up a little, or euro down a little and pound down a lot, right? My thinking still is that it's euro up a lot and maybe pound up a little, right? Because when we go to the pound dollar chart, we have this gigantic line that we literally hit to the tick last week, last Thursday, and then had a big reversal. Haven't made anything of that reversal, of course, as pound is literally right, well, 50 pips back above that line, right? So with cable, it's, you're kind of, I said the same thing last week, but it's now or never, it would seem, with this. I mean, if you break this, then you've broken the trend line. I mean, that's all there is to it. And that's on linear scale. So, you can't, we've already broken it on log scale, but if you break this, you're done. Pound's done. And frankly, I probably wouldn't have any desire to look at cable until it got all the way down to, say, 28.99, call it 129. That's the 618 of the entire move up. I'm counting the move up from the January low, as you know, right? I've talked about that before, not really measuring off of the spike low here, okay? And sometimes it helps to look at to see if you've got the right fib, right? Did you options on the 38.2? Yes, you did actually. So you can see the 38.2 is right here. That was a low from January. You did have that level act as somewhat of a short-term pivot in May, and it was also resistance back earlier this month, actually on June 7th, right into, wasn't that, no, was it BOE? No, BOE, the BOE I'm talking about was over here. But so yeah, so I do think it's the right fib to look at, and yeah, that's where I'm at here. Okay, so yeah, if pound breaks this, I mean, it gets real ugly, I would think, and I'm not sure there would be anything until 129, like any sort of support whatsoever. All right, let's go and look at some other euro crosses, back to our euro cross extravaganza. Euro Kiwi is also an interesting one. If you look at it here on the weekly chart, especially the weekly chart. I mean, does anything, this looks crazy bullish, right? Like, or I should say the potential is insanely bullish. Okay, you guys can still hear me, right? I'm getting some messages here from my computer saying something about audio tech issues, I suppose. Intermittent, but okay, says JB. Pete says it's all good. All right, well, I'll keep trucking here, and we'll hopefully things will work out. But you can see this weekly chart of Euro Kiwi, Euro New Zealand dollar. I mean, this looks pretty insane as far as upside potential is concerned. You do have RBNZ out today. Is this today? Wednesday? Yes, RBNZ, right? 4 o'clock my time, 5 o'clock Eastern, so 5 o'clock New York time. It's obviously right at the rollover, so kind of like the worst time to have an event, but that's when they have it. And you're still in consolidation mode here. But if we were to zoom in, 52-week average, by the way, continues to hold in Euro Kiwi. But if we were to zoom into this chart, you know, where might we want to be finding support? I think we could probably actually zoom in a little bit. So let's go to a 4-hour chart. And you can draw a pretty good looking fork here, right? And there you go. So I'm actually looking for a rally on Kiwi on RBNZ. Remember last week we had, let me go to my Gmail and pull this up for you real quick. Remember I sent out last week, we had BOE, those guys from Prattle, if you remember what I'm talking about there. So they've got, hold on here. Okay, here we go. So this is Prattle. They do, they monitor central bank speak. Okay, kind of sounds kind of weird, but they actually look for signals within, they have an algorithm that tries to decipher bullishness and bearishness, or hawkishness and dovishness, I should say, through the speakers. So last week they had expected that BOE would actually come out with a hawkish statement, right? That was very much against the consensus, and it worked out, right? You got the low at pound and you got a nice rally. Obviously that rally has not held, but now we've got RBNZ. They actually expect a hawkish, slightly hawkish statement, right? Hold rates, neutral or slightly hawkish remarks. So, you know, I think there could, what I'm saying is going long in front of RBNZ, obviously extremely risky proposition, but it probably keeps me from shorting it into RBNZ, right? And looking for an even bigger breakdown than we've already had, okay? So there's two ways to go, or I think the best way to go about this is actually to wait and see if you do get a rally on RBNZ, right? And then let it settle, whatever. And then maybe that actually gives you an opportunity to short Kiwi, maybe long Euro Kiwi is a better way to be than just short Kiwi dollar in general, okay? But that is, you know, something to think about. So let the statement come out, see what Kiwi does. Kiwi's obviously very extended on the downside in the near term. Longer term, like a weekly chart, it looks like it's just about one. And obviously in the Euro Kiwi case, that would be, you know, big upside breakout. You'd probably be a combination of Euro strength and Kiwi weakness, and probably mostly Kiwi weakness, given the big support level that, or the big massive level that Kiwi is testing right now as I speak. So near term, we'll follow this fork for clues, right? For clues on support. Don't know if you're going to have it all the way down at the lower parallel at some point. But keep in mind, these are Kiwi pips. So a drop all the way down back to the 200 average on the 4-hour chart, 68.70. It's 200 pips. It's really not that big of a move in Euro Kiwi because, again, it is Kiwi pips. So that will be something to pay attention to. And after that, why don't we do what we did with Euro Pound, look at Pound Dollar. Why don't we look at Kiwi Dollar? So Kiwi Dollar, thought we had a low in over here last Thursday, just as I thought we had a dollar high in across the board. Obviously, that's not the case. And now you're pressing, well, we've already hit that, which is you're getting close to the low from November of 2017, okay? On a supposedly hawkish statement, Ty asking, what are the horizontal lines? Those are square root levels, okay? And there's actually a thing on the website about that. If you go into the swing updates, right? So you can like click here, swing update from yesterday, and square root progressions, okay? This talks about what those are, okay? So we're looking at progressions here, okay? That's what, when you see those lines on my chart, that's what they are. All it's doing is you're taking the open for the year, in this case 7101, and it's squaring it, and then looking for squaring it and then adding and subtracting that square level. So in progressions. So like, for example, the high this year was on 1, 2, 3, 4th square root progression. And so far, 1, 2, 3, 67, 64 would be 4 square root progressions on the downside. All right. 618 of the entire rally from 2015 is going to be 67.40. Maybe you get a bounce there. If we do break down, though, I think there's a real possibility of actually getting 65.18. Just look across the chart, look how big this is, right? Barring a complete fake out on the downside, which of course is possible, you have to respect the potential for something much deeper in the New Zealand dollar if we do break down. Maybe not immediately, right? Like 67.40 is that, again, is the 618. The 38.2 has been influential, right? That's 70.53. That's been influential as resistance and support. You can see it's an important level. So I would pay attention to 67.40 for a near-term low or something. And then, you know, these former lows over here for potential resistance at 68.48. So you kind of have like 100 pip range to work in there. 60, call it 68.50 to 67.40 for the New Zealand dollar. You know, during and after our RBNZ today is where I'd be. Obviously, those levels I'd be paying attention to. As far as a clear trade idea right now, don't really have one at this moment in time. After RBNZ, that will change, okay? Okay, a possible trade in the Australian dollar. So I still see the Australian dollar here as being a fourth wave, right? Within the drop from the June high earlier this month. So 1, 2, 3, 4, right? Fours, as we know, are usually a little more complex. So if we can get some range action going on here, even go back and test the high here from earlier this week on Monday, actually, then you'd have an opportunity to short, and we'd be looking to take it down to this parallel down here, which is at this point going to be a little below 72.70. Well, it's at 72.70 now, but it's going to be a little lower in a couple days. So an Aussie short position on a little bit of strength is still a possibility. This is about the only in FX that I've had any sort of or been right at all, right? As far as saying that you still need 5 waves down in the Australian dollar. This has been one of those months. Dollar CAD, very strange to see. I know it's been like this for a while, but it's, you know, you've got an absolute skyrocketing price in crude oil, and dollar CAD could care less, right? The price setup, or the, you know, the just the setup itself is still, to me, look for a pullback and for support on the median line, right? I mean, you don't get much more precise than this as far as this providing resistance, okay? And if we can pull back, then you're going to have former resistance to provide support, okay? And that's going to be at this point about 31.50, right? Where before we were looking for maybe a retest of the high, the March high at 31.24. At this point, it's going to be closer to 31.50, which is also the 6.18 low. Again, does this happen? I don't know. But if it did, I know exactly where I want to be paying attention to the Canadian dollar. So you say, well, from here, we continue to fail up near 33.30 level we came into the week looking at. Why not be short? Well, you could, absolutely. But man, it is just completely dead up here. I mean, it just feels like such a fight to be short the dollar anywhere at this point. And until that changes, whatever this bid on dollar is, right? And crude oil, interestingly enough. But until that changes, I just don't have much, I don't have desire to sit here and fight it and fight it and fight it, right? So even if you're a dollar CAD bull here, you're probably annoyed because it's not doing anything. So look for the pullback again into 31.50, and then to me, it would be an opportunity to buy it. You could go as high as 36.85, okay, at some point in July. That is the 618 of the entire decline from the 2016 high. We've got that as well. You can see it, of course, on the long-term page. Right, you've got the parallel and stuff up there too. So, that's a real possibility. In the meantime, of course, just pay attention to this 31.50s area, okay, for dollar CAD. Now this brings me to another cross that I want to look at. So first of all, I guess dollar yen real quick. Just in a range here, we've come up into and just about hit resistance. Again, huge fight, it seems like. 31, I said, 1050. I'd probably widen that out to 1050, 1070 in terms of potential resistance. Not willing to short unless you're up there, or you get back under this median line, which even then it has not been a very good signal of pending weakness, right? It's just been extremely choppy. So when we look at something like when we look at dollar yen, I do want to go and just point out that, we actually still have a bullish profile on the daily, right? We've got the overbought levels up at the highs. We've got consolidation. Remember, previously we were looking for a little more consolidation than this. Like we were looking for, maybe if we were going to get a triangle, that was kind of, last week I talked about the possibility of getting a triangle. You're looking for swings that relate by 618. So we were looking for 108, the 108.90 area or so, which would be the 618 alternating legs and also the month open. So we'd be looking for a drop there and then a little more tightness within the range, but it's just not happening. So you do kind of have to wonder if we just have a tighter consolidation and if dollar yen is going to end up breaking through the top side, right? Ty saying reverse head and shoulders. Right, so you're looking for like a 4-hour chart. Okay. Yeah, on yen, right, exactly. Anyway, so what I'm getting at is we kind of have to maybe forget about the downside in dollar yen at this point. if it's just not going to happen, and maybe look at something like a long yen cross. Well, one that is very interesting is actually CAD yen. CAD yen is right off of support. Okay. A little weird to see the CAD yen's been declining as crude oil's been going bananas, but maybe it gets a delayed reaction or something. I don't know. So this is a candidate for a long position, maybe a way to play both a dollar CAD pullback and an eventual, dollar yen breakout to the upside is maybe be long CAD yen. And if you look at it this way, you could construe this as 1, 2, 3, 4, 5 A, B, C, right? So here's the 60-minute chart. Might be doing a little work here and putting in some sort of head and shoulders low, right? Or head and shoulders bottom, as we might call it. So this is a place to pay attention to, I think, CAD yen, okay? All right, that's pretty much what I got for FX at the moment. Let's look at, we'll move on now to some indices, such as I know Mahai is holding his breath over there, looking for the Nikkei analysis. So let's take a peek. So, yeah, we'll look at all of them. So we kind of, we able to identify resistance up here in the Nikkei in May, came back, tested again in mid-June, rolled over, big down day, consolidation. But again, we're having problems breaking to the downside. As much as I want to believe in the downside, in the Nikkei for a little bit and for a bigger drop back towards bigger support, look, we're still holding on this, we're still holding this very important support, not just from the 200-day average, but also from a parallel that crosses a lot of important stuff, right? And did crude just go to the new high through the high May highs? I think it did. So that just happened. So bottom line here, behind everyone else, is that when I'm looking at, okay, take a short view, and I would put support at this point about 22 on this 4-hour closing low here, 22,200 or so, and your resistance within this range is back up at, as we've talked about a lot, is the 200 period average on the 4-hour chart, so like 22,590 or so. Okay. I mean, really, within all this, you're just in a big consolidation, and maybe this ends up as your triangle, right? So that would be kind of like a, A, B, C, D, E, and then to the upside. So take a short view now, right? And maybe treat this as a developing triangle, because certainly you've got 3 legs down, right? You could argue that this is 7 legs up, 1, 2, 3, 4, 5, 6, 7, which is just 3 waves, an X wave, and then another 3 waves, another 3 waves down. So everything being corrective from the May high, to me warns, if you will, or tells me that you've got the risk of, or not risk, but the possibility, I should say, of this everything from here being a triangle. So that means we're range bound for a little bit more, and then we'll have resolution. Okay. So I hope that does that view and that acknowledgement of that possibility kind of helps a little bit. Jesus Christ, look at these things. Here's the S&P. So before, remember S&P, Mahai is saying, so having a Nikkei go higher, shouldn't we expect you? Yes, probably, but again, this isn't a done deal, right? And we can't make like these these grand assumptions either. So yes, I agree with you. Like if you're going to get some sideways movement here, and keep in mind there's also, this could be A, and then this could be, you could be a triangle B and then go lower. I mean, you really do have to look at each chart on its own merits, right? Nowhere has that been more made more clear, right, than the recent disconnect, or it's not that recent anymore, but the disconnect between oil and the Canadian dollar, not to mention the Australian dollar and copper, right? And there's been times when the Nikkei has done different things than the S&P has done, right? So it's not always, it's not always, there's never an always, right? It's not always going to move 1 for 1. If it did that, then we just would have one market, right? And we would just trade one market and it would be really easy. We'd have you're a bull or you're a bear, right? It's not the case. So with me, the S&P levels are kind of the same here. I mean, maybe hopefully we have a decision like relatively soon, like the next couple of days, but we closed literally right on the support that we talked about in one of the posts. I think it was last week, or maybe it was earlier this week, I'm not sure. But the big support, the big S&P support for me is probably this 2660s. You get the 200-day average there, right? You've got clean horizontal levels there, and you've got the line off of the April and May lows, okay? You can get into there, then yeah, major support. If the market, let's say that we close back through here, I would probably put 2760 as a fairly important spot. That was I believe that was a high volume day. Let me make sure. Oh no, it was not. It was actually the high volume day was here. No wonder. I'll just say that if we close over like 2740, see these highs here, close over 2740, then treat this as a lows in place. So it's kind of like waiting for today to figure it out. So close over 2740 today, and I'll say a lows in place. Otherwise, I'd still, respect 2665 as a spot. Dow's or not the same, but somewhat similar in that the really big spot to me still is probably the line off of the February and the April lows. That was support in May. And if you can get down there, it's 23,800. So we're currently 2,400. It's not, in this market, that's really not that far away. I mean, today's range alone is 24.6 to 24.1. It's a 500-point range. So, If we start to trade off today, you could certainly be there quickly. The other thing with the Dow, which is a bit confusing too, is that you do have the 5 waves down, right? It's just a tale of completely different markets. So we just, Mahai, to your point, talking about, the Nikkei and, if it's going to go one way, should we expect, the U.S. indices to go the same way? I mean, I would say gut kind of says yes, right? But I mean, hell, we've had that Dow's been falling all month. S&P and NASDAQ didn't follow suit for another couple of weeks, right? So it's like even in the U.S., even U.S. indices aren't moving together. Everything is, it's like there's different markets, right? Everything is a completely different market. So when it comes to the Dow, I think that this is the big level for support, right? 23,800 roughly, and you get a bounce. Probably look at 24,800 as the level. So there's your resistance there. You can see lots of trading around there, highs, lows. So you've got, 23,800, 24,850 as essentially your levels. Yeah, that's right, Mahai. So it's like, if this is a 1 and you get a 2, that might be the place to short it, right? But probably don't want to do anything between these levels, right? These are probably the 2 levels to pay attention to, 23,800, 24,850. In the NASDAQ, the Qs have been so clean. This is, you're looking at the ETF, right? We're just looking at the Qs, and which is just the US market. Trading on these parallels, the level on my chart that looks like a huge magnet is the 167 spot right down here. And that is the 200-day. It is also the 25 line of the fork or the channel that starts at the low in February. And again, we topped on the 75 line, right? Twice, a couple times. So it's like if that is your, your concept of symmetry, right? Then that is the best place to go for a big, big low. Now between here and there, you could trade back up to 174.85. Right? That's this. You can see here. Resistance, support, support, gap, 174.90, call it, whatever. You get the idea. 174.80 to 174.90. That would be potential for resistance, right? So we've found support on this parallel too. So this is, my levels on the NASDAQ, 174.80, 90, and eventually 167, okay? That would be your Qs if you wanted to look at it in, ET or CFD land, I should say. It's a little different. But the level is similar in that your trend line off April and May says 68.59, call it 68.60 for a potential low. Okay. All right. Let's look at insanity. This is crude oil. Daily chart, 2008, 2013 trend line, parallel here. We topped on it. We did drop about almost $9 and could not quite get to what I thought was going to be more important support. Instead, we went straight up with obviously almost all of that coming since last since Friday. So, 4 trading days and, $8 later, crude oil is at a new high for the move. Okay. I don't have much to say here on on crude oil at this point. I mean, this is a bit beyond my comprehension, but I'm not going to sit here and tell you the crude is going, to the next major level, which is right here, which is $86. Maybe it is, but it does seem a bit emotional here in the near term. And if we were to pull back, I'd be looking for support probably around $70. Okay, that's just the center line, just as before. So, if you eke out some more gains, you're probably looking at $75. $75, by the way, is the low here from October of 2011. I'm a bit shocked to see that this has happened so quickly, but that's what markets are supposed to do, I guess. So my levels for crude oil in the near term are going to be $75, and the median line, which currently is just above 70. Okay, can draw it over this low. And it's like 70-30. So call it 70-30 to to 75 as the levels to pay attention to in crude. Okay. What about gold? So the level that we've had for a while at this point, it looks like it's going to get hit. And maybe this is the key to the whole dollar thing, right? Maybe we just don't have any dollar bid, or not dollar bid, any dollar offer. Maybe we have no dollar support, like real support, until you get, excuse me, I'm sorry, until you get 1235, 1236, right? The December low here is 1236. You've got the long-term averages down there, 200-week and 156-week. Again, that's 3-year, and be in, not even $20, $18, $18, $17, $18 lower, which can happen awfully fast. So yeah, that would be my overview here on the in macro land. That's all I got. So before I wrap it up and hit the end webinar button, are there any questions? I know right now is not the for me is not the cleanest. It's been this way for a while, been a little clouded as far as the markets are concerned, and there's not much you can do about that. Silver. Mahai asked about silver. So silver is holding up still so much better than gold. Sitting right on the level. If it, we get a flush, I guess you're looking at a retest of this level here. I would say just watch gold though, right? Because gold, I think, is the level that, or is the market that's going to tell you when or if the precious metals are going to have a low or do something, right, other than go down. I say that because gold has a very obvious clean level to watch, right? The 13, or sorry, not 13, but 1230s. We don't really have that for silver because silver's been trading. There's no trend line here really to speak of, right? You do have the fib down here. but it's just the lows. It's a horizontal level down the 1550s, 1560s, right? December 2016 low, all this stuff. Low from December 2017. So yeah, that's what I would pay attention to. We could look at copper real fast. Copper looks like it's going to be in maybe a world of pain here for a while. It's in a really weak position. I mean, after we had a false breakout through the highs, you basically have the double top here. And I think copper could get all the way down to 270, below 277, right? I think that's a real possibility for copper. And that's going to be your next parallel on the downside. So you can see this is linear chart, by the way, but just drawing the trend line here and extend, off of other peaks, right? You get some really solid resistance levels and pivots, right? So the next one, again, comes in down here. So if you get a bounce here, which you might not because we're already below the center line, but if you get a bounce, I'd kind of look at just this underside of this line, this red line here, as as potential resistance. So that's going to be up at around 305. It's kind of the highs from last Friday and then Monday, and that would be where I'd look at resistance for copper. So yeah, copper doesn't look great. Maybe that core, I hate making the course, the making up correlations or whatever, not making up, but trying to pretend that I'm forcing an opinion on one market onto the other, because we just haven't seen very solid relationships like Aussie and copper. But this is certainly, you would think this does actually probably keep pressure on the Australian dollar as well. So that speaks to the fourth wave thing and, more downside in the Australian dollar. So, okay, thank you all so much for your time. I'll get this archived as soon as possible, and we'll be back with an update, of course, as always, later today, and hopefully these markets start to make a little bit more sense, and we get some clarity on what's going on with the dollar and equities and the metals. Okay. All right. So thank you all again, and I will talk to you next week. All right. Bye.